Hello everyone, welcome to IDLC's Q3 2021 earnings disclosure session. This is Faria Majabin Promi and I'll be your host for today. Let me quickly introduce you to our panel. I will start with Mr. M. Jamaluddin, our CEO and Managing Director. We have with us our Deputy Managing Director, Mr. Said Javed Noor, and our Group CFO, Mr. Masud Karim Mojumdar. We also have with us Mr. Rizwanul Islam from our Treasury Department. I would like to inform you that we have already uploaded our presentation and financials in our website. If you may want, you can download it from there. Please stay with us till the end of the session where you can ask your question. If you're not being able to post your questions, please register. Without any further ado, I would like to request our CEO and MD to start with a few opening words.
Thank you, Faria. Good day to everyone watching from different parts of the world. I would like to welcome you all to IDLC's earnings disclosure session. First of all, let us take a look at our third quarter performance. And at the backdrop of this, Bangladesh, through its strict measures, has been able to curb the number of COVID cases. At the same time, government has been actively working to prevent any major shocks to the economy, and we may expect the economy to bounce back in the upcoming quarters if COVID cases remain low. In fact, economic activity has already been picking up. Year-on-year, private sector credit growth rose to 8.77% in September compared to 8.42% in August 2021, while year-on-year deposits grew by 11.84% in August. During this third quarter of 2021, the prevailing liquidity surplus and low interest scenario moderated on the back of US dollar sale and regulatory interventions, although current liquidity is still considerably high in the market. Our DMD will further talk about this in details. On the other side, the measure was posted a growth of 19.2% in Q3 2021 with a strong daily turnovers amid continued investor confidence. In view of this, IDLC achieved a profit of BDT 1,593 million during the first 3 quarters of 2021, which is at a similar level compared to that of the previous year. Though our lending business continued to be slow, we could manage incremental profits from our capital market subsidiaries amidst the liquid money market scenario. For our finance vertical, our emphasis remained on collections as maintaining portfolio quality growth. Portfolio quality has been the biggest challenge of a pandemic-stricken 2021. As far as business growth is concerned, we will be persistent with our cautious stance. However, we will keep maintaining our liquidity buffer to enable business growth at opportune moments. We will continue to make efforts towards digitalization of our offerings. In this quarter, we have already onboarded around 30,000 customers through our digital channel. Our customers' comfort and safety will remain our top priority, and we will continue our efforts towards ensuring that they are well serviced. In addition, our focus will remain on community initiatives. Now, our DMD, Said Javed Noor, and Group CFO, Masud Karim Mojumdar, will take you through the highlights of the quarter. Nice. Is Javed's turn to take the floor and put lights on our performance in the last quarter.
Thank you, Jamal. Thanks a lot for your nice deliberation. Good day, everyone. We'd like to basically first start with the operating environment. In the operating environment, we have two businesses. One is basically core lending business and the capital markets. I will dissect the operating in a slightly differently. For the core lending business, I would say the liquidity surplus and the low interest rate scenario has moderated in Q3. This has been on account of the central bank has sold roughly 1.38 billion worth of US dollar to support the import growth of the scheduled banks. At the same time, the the remittances has also fell by around 19%. So if you look at the numbers, the LC settlement has increased by 45% from July August 21 to July August 20. The import rose roughly in the same in tandem around 46%, and the remittance fell by around 19%. And also because of this, the current account deficit has widened by around US dollar 1.2 billion. If we must next page, please. If we look at the the other part, it's basically the banks. Our CEO already advised that the banks posted higher deposit growth and deposit advance and growth, while there are ample liquidity. The intervention from the central bank has resulted into slightly higher spike in the deposit rates as far as the retail deposit rates are concerned. As the deposit rates were crashing, central bank came up with the circular that the retail deposit rate cannot be below the inflation rate. And in September, the inflation rate was around 5.59, and as a result, all the banks has to offer minimum 5.6% as a retail deposit rate. At the same time, central bank, government also declined the rates of national savings certificates, which has been a disparity in the system, which they are trying to gradually align. Because of the intervention from the central bank, the interbank call money market has also increased by around 100 pips, and the treasury bill has also in general witnessed something around 200 pips uptick. And central bank again introduced BB bill, which basically the current holding is around 112 billion. It's just built in last 2 months. So the mopping up of liquidity is ongoing. Also, what we believe, the relaxation of the classification policy by the central bank is almost at its close end. Move on. If we look at the capital market, because of the strong liquidity and the low interest rate, the capital market has been, I would say, the booming after the correction of slight correction in Q1 2021. DSE index has generated good return in Q2 and Q3, and resultantly in a 9 months period, the return has been around 35.7%, which is humongous. The daily average turnover for the first 9 months has reached around 15.3 billion, especially in Q3, this stood at around 21.7 billion. This probably is the highest ever turnover that we have seen in a quarter. On the I would say the excess, the DSE platform has also enabled trade of the treasury bonds, and also they've basically broadened the horizon. The DSE SME platform started trading in 30th September 2021. Move on. Amidst the backdrop, our CEO has also already advised that we made 1,593 million of NPAT on a consolidated basis. For standalone basis or for IDLC finance, it's around 1,144 million. Our return on asset was around 1.24%. Return on equity stood at 10.11%. Customer advance is at 91 billion, and non-bank deposit is around 65.9 billion. Move on. On a consolidated basis, if we look at the performance of IDLC group, the finance business has suffered. The profit growth was around 24% if we compare this with Q3 of 2020. So I'll elaborate further in the following slide. However, the capital market subsidiaries has done fantastic as the capital market posted huge return. On an overall basis, our consolidated NPAT has degrew by around 1%. Move on. So if you look at our core finance business, if you look at the operating income, the operating income posted roughly 21% growth if we compare it with Q3 2020, and also operating profit also increased by around 28%. You are aware that the pandemic has basically impacted all circles of life, and it has been an extremely challenging environment. What we have seen, the slower repayment from our customer groups. So what we decided to remain cautious in this environment. So we took higher provisions, and that's not a small amount. We took significantly higher provision. As a result, despite high growth in operating profit, the net profit after tax has dropped by around 24%. I think that's been a prudent step from our end, because we wanted the financing business to be a sustainable one. We're trying to avoid surprises. Move on. So now I would like to hand it over to our CFO, Masud Karim Mujumdar, for further elaboration of our financials.
Thank you, Javed bhai. As we have already seen our snapshot of IDLC Group and solo IDLC Finance. If I can take you through a bit details of the balance sheet and PLN item, we can say the loans and advances grew by 5% over Q3 of 2020. It's around 9,100 crore around at the end of Q3. On the other hand, our retail deposit has declined by 4%. I would like to say that our total deposit is around 7,270 crore around. The main reason for declining of non-bank deposit or deposit is basically, I would say, it's a managed growth. I mean, as there were a little appetite from our lending side, a bit slow, as our CEO and Deputy Managing Director has already said that the appetite from lending side was a bit slow, and on that, for that reason, from borrowing side, we slowed down our growth. I mean, we took deposit only to the extent of our requirement. So I would say it's a managed growth, 4% degrowth from the last quarter, from Q3 2020 to Q3 2021. In case of profit and loss account, as net interest income grew by 11%. It's basically average prevailing portfolio compared to Q3 2020 to Q3 2021 was a bit higher. That's the main reason. At the same time, as you know, for last 9 months, because of liquidity, the lending rate has declined. At the same time, we could able to decrease our borrowing cost a bit higher than the lending rate. So there is a spread benefit we enjoyed because of declining interest rate scenario. In case of fees and other income, as you have seen, it's a 100% growth. It's mainly because of, as our two speakers said, is mainly because from capital market operation. As you know, if I say a few figure, like in daily turnover, in case of IDLC brokerage, our IDLC securities, in Q3 2020, their average daily turnover was around 48 crore. On the same thing in 2021, it was 108 crore. So this is a massive increase in daily turnover. That's the resultant of fee income generated from our trading portfolio. On the other hand, if you see the investment income, as these two, investment income and fee income, these two basically generated from our capital market operation. We took position in 2020 and early 2021, and when the index jumped to 7,400 level, we got the opportunity and capitalized some. Liquidated our few portfolio and realized few capital gain. That's the main reason for fee income and investment income growth. On the other hand, our operating expense is around 15%, is aligned at our targeted ratio. As you see, our operating income grew by around 37%, but operating expense grew by 15%, which we think is maintaining our jaw. It's aligned with our target and budget. Because of fees and investment income, our operating profit grew by 55%. As Javed already mentioned, that loans and loss provisions, we have charged higher provision due to withdrawal of relaxing classification policy from Bangladesh Bank, and we have created some cushion and room for rainy days for coming period, and that's the main reason for declining 1% of net profit from 161 crore to 159 crore. If we go further, if we can see the earlier slide was compared to Q3 2022 compared to 2021. If we see the same thing like net interest income, operating expense, and cost income ratios for quarter on quarter, it seems that in Q4, in case of net interest income, you see a hike in Q4, but gradually it's declining because of our portfolio growth was not at par our target. Plus our lending rate was a bit declined. That's the main reason for declining net interest income. And other thing, as we already withdraw the loan classification freezing policies, we said that's why we have to take more interest suspense with de-recognize of interest income. That's the one of the reason for declining interest income. On the other hand, because of capital market operation, our net we booked some capital gain here in Q3. That's the reason a bit increase from last quarter to this quarter. Operating expense, we are maintaining our targeted level around from each and every quarter. It's gradually actually fixed. I mean, because of one-off course, it might fluctuate over quarter to quarter, but actually it remained at this level over the last 8 or 9 quarters. As a result, our cost income ratio remained at 38%. Last quarter it was 39%. We think below 40, any rate below 40 is very sustainable for our financial institution like IDLC. We will try to maintain our cost of income ratio below 40 over next quarter or coming periods. And if you see the balance sheet size, and it's remained almost balance sheet side slight decrease. Or on the other hand, our loans and advances has increased slightly 1% from last quarter. The main reason for declining balance sheet size from 136 billion to 130 billion is mainly reduction of money market activities, arbitrage activities. Borrowings, both borrowing and lending side has decreased due to reduction of money market activities. So as I said earlier, our term deposit had decreased 3% and non-bank deposit had decreased by almost 0.4%. It was actually managed growth, or deliberately we took that degrowth on the because of appetite of lending side. So if we move forward to the next slide, here you can see the division or department wise our figures. We can, our in lending business, our core 3 part is SME, consumer or retail, and corporate business. Our retail and SME are maintaining the similar level of portfolio, whereas our corporate portfolio compared to Q4 2020, that has decreased slightly around 400 plus crore portfolio size because of short-term nature and few liquidation and some less disbursement growth. Mainly, these are the reason for degrowth of corporate portfolio. If we see the composition, in last year it was 36% SME, 32% corporate, and 32% was consumer. On the other hand, in this year, as the corporate has declined 32 to 29, SME has increased 38% because of declining of corporate. So consumer is maintaining almost 32 to 33%, SME 38%, and corporate is 29%. So last earnings call, we have also shown you the status of our restructured portfolio. Somebody asked what is the status of current status of our restructure. You know, as in 2020, end of 20, we as per Bangladesh Bank circular, we offered some restructure or deferred payment to few of our clients. In if I say in 2020, around 45% of our portfolio were restructured. Around at the end of December 2020, it was around 4,100 crore deferred restructured portfolio. Currently, the amount has reduced to 3,000. As you see here, is 3,056 crore, which is I could say 25%, around 26% reduction of restructured account. So the main message we would like to say that our due to Bangladesh Bank circular and to facilitate our valued customer, we offered them few restructuring and deferred opportunities, but that from that account we have collected almost 26% by this 9 months. So it's continuously we are repaying, as Javed already said, the repayment was very slow during March, April, May, but from August, September, the collection ratio is gradually improving. And that's the result we see the restructured, even restructured portfolio decreasing gradually. Now it's around, at the end of 2020, it was around 45% of our total portfolio was restructured, but rightly it is 35%. As our collection is improving, we can say that in coming quarter, it will be further reduced with the effort of our collection and collection effort mainly. So going forward, NPL, as Javed already said, and our CEO already says, due to pandemic situation, our NPL ratio has slightly increased. Compared to 2020, it was 1.79 to 3.80. Actually, it will not be wise to compare with 2020 because of Bangladesh Bank classification policy and few write-off account. The NPL ratio dropped to 1.79. If we ignore the only Q3 part, if you see the whole graph, usually our NPL ratio move around 2.8, 2.9, 2.93 or 2.8. This is our NPL ratio range. But at this quarter, as the classification policy has withdrawn, we have kept our provisions, and for that reason the NPL has slightly increased. But our projection is at the end of this year, it might go down to below 3%. Our all effort and collection and our management initiatives regarding collection. So we are expecting that at the end of this year, it might go down to 3 or below 3%. So these are the shareholders' return. In case of shareholders' return, our return on asset is around 1.7% annualized. Our return on equity is 14%. Earning per share is 1.4 and book value is 41%. I think you might be surprised at what happened in Q3 or Q4 of 2020. That's because of few one-off gain we booked in that 2 quarters, capital gain from government sale of government securities. But usually we saw our trend is around, we maintain our return asset around 1.7 to 2%. Our return on equity is 14%, 14 to 16%, and that's the combination result is earning per share is 1.4 and book value is 41 at this moment. So if we move forward, and we capitalize with the adequate capital adequacy ratio buffer. As you know, our regulatory requirement is 10%, but our consolidated basis, our capital adequacy ratio is almost 18%. But in case of solo, IDLC Finance standalone is 14.7%, and loan to fund ratio is below our regulatory limit. Is as per NBFI, we can maintain our loan to fund ratio is 95%, but it's as the loan lending opportunity is a bit less for last 2 quarters, our ratio is we are maintaining at 78%, but regulatory limit is our 95%. So from this slide, I would like to invite our Deputy Managing Director Javed Bhai. Please, if you go through the next 2-3 slides.
Thank you, Masood. I'd say during the last quarter, our initiative for digital push has been ongoing. So we basically launched our term deposit in our own platform. This has been enabled because of the simplified KYC that central bank has allowed. So now one can basically open their deposit instrument up to 8 lakhs without any involvement, without any signing of, without any wet signature, without coming to our branches. So we have also, on the back of the strong KYC initiative, we also partnered with one of the leading mobile financial services in the country. We launched a micro DPS. So this micro DPS has almost approximately added 30,000 customers and taking our client base to 92,000. So we are really excited about these digital initiatives. You probably will see some more things coming up going forward. So our structured finance team has acted as lead arranger for around 3,925 million worth of bonds for 2 eminent institutions. We have been awarded as the SME Financier of the Year, Asia, in the silver category by SME Finance Forum. Our investment banking wing has facilitated the largest ever merger and acquisition deal in the pharmaceutical industry. Move on. So we've signed with Central Bank, Bangladesh Bank and SME Foundation for disbursement of stimulus package for CMSs. This is an ongoing initiative. We get different funding baskets from Central Bank and other DFIs. We took initiative to recognize the successful SMEs in partnership with a leading newspaper. We organized sessions for, basically we signed an MOU with the UN Women Bangladesh under the Women Empowerment for Inclusive Growth Program. And we have basically signed up with many of the real estate developers for alternative sourcing of home loans. Move on. So going forward, our key focus will be maintaining liquidity buffer so that the moment economy picks up, we can basically capitalize on that. We are and we will continue to monitor our portfolio quality while taking cautious approach for business. We will continue our focus on development of alternate channels for sources, alternate channels for business growth, which you have seen adding 30,000 customers through MFS. And in the background, we think that there will be few more opportunities coming up in the capital market space if the interest rate environment remains subdued for some time. Communication initiatives to ongoing, and our initiatives to digitalize our processes, improve efficiency will continue. So I think we are done with our presentation. Over to Faria.
Thank you, Javed, for your wonderful presentation. We can now move on to our question and answer session. We have a few questions coming in. The first question is from Mr. Qazi Arif Mahmood. He asked, what is the reason for the large jump in fixed asset in this year?
Mujumdar bhai, can you basically explain?
That's basically a single reason. I mean, as a few of you might know that IDLC has acquired a land in Tejgaon. Before this quarter, it was under other asset, as there are few regulatory requirements were pending after completion of commercial conversion and regulatory all completion. We have just convert other asset to fixed asset. After we have just completed every regulatory requirement, so we are ready for our further. I mean, it's just completed our procurement process from initiation to the regulatory requirement completion. So just because of transfer from other asset to fixed asset, it's just a land acquisition.
Thank you, Mujumdar bhai. We have another question from the same viewer. Considering the increase in NPL percentage, what is your plan for the upcoming quarter and how do you see yourself managing this?
As of now, I would say you might have seen that the restructured portfolio, which was around 45% back in December 31st, 2020, it has now dropped to 35%. So there was reduction of around 25%. So, and if you look at the collection ratio from the restructured portfolio, it has reached up to 127%. So as of now, our key focus is on collection. We monitor it on a daily basis. There has been a lot of incentives that have been offered to the team. Part of the sales team has been channeled to basically to collect money from the errant borrowers. So while we have remained closed, we are, I would say, we are hopeful that probably this quarter in Q4 2021, things will slightly bit improve, but major improvement will come on in 2020.
Thank you, Javed bhai. Our next question is from Mr. Maqsudur Rahman again. What percentage of IDLC's loan portfolio is under relaxed classification? What's the status of the deferred loans of 2020?
I think we have given a slide of the restructured portfolio where you can see that it was around 45% back in 31st December 2020. It has seen improvement. Now it's down to 35%. In absolute terms, I think it was around 4,000 crore. Now it has gone down to 3,000 crore. If you look at the collection ratio from this restructured portfolio, it is around 127%. So we're hopeful that things will improve as the business activity has returned, operating environment has improved, the collection will continue, and hopefully things will improve further in 2022.
We have two more questions from the same viewer. Where do you see the banking sector liquidity going forward? Why did SME portfolio go down Q-on-Q basis in Q3'21? Can you please share sector-wise NPL percentage?
Mujumdar, do you have the sector-wise NPL with us?
Not actually sector-wise. I got our, division-wise portfolio. NPL I can share with you of 3.8% aggregate NPL ratio. Our SME is 4.8. Our corporate is 4.6 and retail is 1.8. So aggregate is 3.8.
Okay. To answer your first question, the liquidity scenario, what you have seen that the import are increasing. Import is increasing, both LC opening and settlement. At the same time, the remittance has dropped a bit. and central bank is taking all steps to mop up excess liquidity from the market. Our view is that probably we may see tighter liquidity in early 2022 or second quarter of 2022. Faria, I think all the questions are answered.
Yes, fine. Our next question from our viewer, Mr. Hassan, is what is the size of the stock market portfolio from the group level? What is going to be your strategy in capital market operations considering current market condition?
Capital market, I would say, has always been opportunistic. If you look at when there are ample liquidity in the market, the capital market offers fantastic return. But the moment the liquidity dries up, the interest rate goes up, the capital market will not offer probably any return or negative return. So our strategy is to operate within the regulatory limit, which I think as of now is 25% of the capital, and at the same time remain opportunistic. You might see that in some point in time we hold minimal amount of exposure in capital market, but depending upon the interest rate environment, we probably will re-strategize.
Thank you, Javed Bhai. Moving on to our next question from Mr. Maqsudur Rahman. Do you have any plan on digital microloan through MFS?
We just have launched the micro DPS through MFS. It's just been, I think, 3 months. We are experiencing the space. I would say it's too early to comment because there are regulatory barriers which we will need to cross. So as of now, I would say I would not comment on this.
Okay. We don't have any more questions. We will wait for a few seconds to see if we get any more questions. I think we have already answered all the questions. With that, we have come to an end of our question and answer session, and we would like to conclude our session over here. Thank you everyone for being with us patiently. Hope to see you again in our next earnings disclosure session. Thank you.
Thank you.
Thank you.